Hey folks, it's Rick Whittemore. Time for your March 2023 Austin real estate market update. We have a significant market shift that is right around the corner, and I wanted to cover that. Talk a couple of statistics real quickly with you. Also want to cover interest rates again, kind of a topic that we kind of just can't get rid of these days. And then want to talk to you about why I live in Texas. All right, let's chat a little bit about the average sale price in the Austin market. Good news is average sale price has stabilized and is actually starting to go up a little bit. So let's take a look at this real quick. You can see March sales prices are up for the first time in several months. So that's really good news for sellers. Market stabilizing a little bit. April's stats are not in yet, but they will be out here in the next couple of weeks. And I expect April to be continuing that upward trend. So that's some good news there. Monthly inventory. So here's our inventory. Take a look at that. We are really at almost an all-time high of inventory over the last 5 years. Last year, again, we were kind of fairly high as we got into the fall of last year. I think right now we're kind of in a normal spring trend. So most sellers list their homes kind of in the spring. February to May, June is typically that time frame for that. And then you see you get into kind of summer and get into the winter months, it kind of falls off a little bit. So we're going to touch on this here in a little bit and kind of talk about where it's going to be trending, because I think inventory is going to be tightening up as we get to the end of the year. Let's take a look at the number of homes sold. Right now we're on a really solid trajectory of a very normal spring market of the number of homes sold. If you look at the green line, that was 2019. That was the year previous to all the COVID craziness and stuff that's happened in the last couple of years. So we're really trending just a little bit behind 2019. I think we will eclipse 2019 as we get into summer and out the backside of summer. So we'll be really back to that normal market. So lots of times on social media and on the news, you hear a lot of doom and gloom. They're just giving you some real quick headlines. They want to grab you. They want you to watch the newscast so they can sell advertising. But we want to tell the rest of the story, the real story here. So as we start looking at data moving into the summer and into the fall, take a look over here to the far right of the chart. So we have some really low numbers in blue. That was last year, 2022. So that's really when the market softened. So it's going to be a continued bumpy ride in the media potentially for the next couple of months as we get into summer. As we crest over the backside of summer, all of a sudden the numbers are going to start changing. We're going to be year over year. Media needs to be looking for month over month, of course, but they do not because it doesn't sound as dramatic. All right, so the year over year. So as we look at it in the fall, we're really going to start seeing some really positive numbers when we get into the fall. So hopefully the media will report that. Maybe they'll actually do it accurately. So I want to talk about interest rates real quick. Interest rates are still fairly high. They're kind of in the mid sixes right now. They've been sitting pretty solid for the last week or so. I do think in the next couple of weeks, we're going to start seeing interest rates start to decline a little bit. So it's going to be a slow trajectory down over the summer. So I would project by the end of summer, we're going to see mid fives to low fives is where we're going to be. And we're going to kind of get a settle in there. And there's a lot of data that the Fed and mortgage folks look at. That stuff's going to be rolling over some bad data from the last couple of years. We're going to be into more positive territory, which is going to have a nice reflection on interest rates in the future. So that's some really good stuff here. So let's take a look at this chart here. So this is interest rates since about 1970. So it talks about that, and there's also, you see kind of the gray shaded lines, those are recessions. Take a look at each and every single recession, and even though it's not official, but we are in a recession, but it's not official. It will be announced here at some point in the next couple of months, I would think, and we'll be in a recession. But every single recession, without fail, since about 1970, in every recession, interest rates have declined. So mark my words, interest rates will be declining soon. So the big burning question everybody has is, why do I live in Texas? Well, Texas is a great place to live, but let's talk about economy and real estate in Texas real quick. Texas is steady Eddie. It's an incredibly diverse economy, and that is what is so fantastic for real estate. So let's take a look at this, because I came up from California. I'm one of those, but I've been here forever, so I would say I'm an honorary Austinite at this point. But let's go ahead and take a look, because remember the mortgage meltdown. Everything crashed and burned and things were that bad, but they weren't that bad in Texas. So let's take a look at that. California. So if we look right in there, that 2006 to 2012, nice dip. Prices, everything else really took a solid hit. And this goes up to 2021. Let's look at our friend Florida. Florida, everybody's moving to Florida now, right? A lot of folks on the West Coast, East Coast, everybody's going to Florida, Texas, Arizona a little bit. Those are kind of the hot places to live. Let's take a look at Florida. Here's Florida during the mortgage meltdown. Florida took a big hit again. Now let's take a look at good old Texas. What did Texas do during the mortgage meltdown? Well, here it is. Take a look at it. Right there in that 2006, 2012, steady Eddie. We kind of flatlined for a couple of years and then went right back up. Everybody else did that, went down and then came back up. Texas is steady. Even right now, believe it or not, with all the doom and gloom going on, Texas is still holding steady as a state. Austin's took a little bit of a bigger hit than the rest of the state, but Austin's roaring back and the state's going to come right back too. So again, I think a great time to buy is now. Between now and, let's say, Christmas coming up, somewhere in that time is when you got to be buying. We're going to hit the market next year or even in the fall. Interest rates are going to come down, and what's going to happen? Interest rates come down, buyers are going to come out of the woodwork. All of a sudden, our high inventory is going to come low. People are going to be out looking for homes because it's going to be the right time to buy. So I think it's pretty smart to get ahead of that curve right there. Buy your home before the market ramps up again, because we do have a housing shortage, believe it or not. It doesn't feel like it right now, but there's a housing shortage. And one reason there's a housing shortage, let's take a look at this last chart right here. This is population data for Austin, Round Rock, Georgetown, the MSA, for the last 50 years. Look at that trajectory. That sucker is going straight up. Guess what? That's not changing no matter what. That's not changing. People keep moving here. Maybe a little dip right now, maybe a little bit of a slowdown, but it's going to pick right back up, and we don't have enough houses for all those people that are moving here. That will drive prices right back up. So, questions about Austin real estate market? I would love to chat with you about it. Shoot me a call. Thanks.